Oh, which is, I mean, in a way, in terms of new information, not very much, because U.S. markets were shut. U.S. markets were shut for the 4th of July holiday, so no cues out of there. So we kind of start trading off our own steam in terms of where we left off yesterday. And yesterday was interesting in terms of the price action. By the way, I just want to start by making this one point, that the Nifty is now up 700 points in the last 5 sessions, 698 to be precise. That is as fast as they come. Even, we've had similar instances in the past. I mean, it happens once in a while. But after we took out, or rather around the time that we were about to take off the previous all-time high, I mean, the pace gathered momentum, and then it's been gaps and gaps and gaps. Yesterday, we got the first signal that maybe, after such a large gain in a very compressed time frame, the conviction whether this is going to continue at this same pace is starting to falter a little bit. So, the Nifty closed slightly above the upper end of the rising channel. Yes, that is true, by about 40-45 points. But the Nifty also formed what is called a doji candlestick pattern, which is nothing but simply the fact that the opening and the closing levels were the same. What this kind of indicates is indecision. I mean, whether... it's kind of right in the middle of the range if you just look at the daily chart. Actually, it's true for the Nifty and the Bank Nifty as well. The low yesterday, which was made at 10 in the morning, was 19,300. The high, which was made, was 19,434. So, with the doji pattern yesterday, the low of yesterday, which is 19,300, is to be watched on the downside. A break below it, a close below it, perhaps leads us to a near-term pullback, some sort of consolidation. And I think that would not be bad at all, given the pace of the move that we've had. So 19,300 on the downside. And then, of course, below that, you get the 20-day, the 40-day exponential moving average and things like that. But those are distance away. So keep 19,300 as the first kind of stop. Alternately, it's possible the market runs away. I would say the chances of that, after so much in the back, perhaps are, the probability of that is a little lower. But the targets on the upside are around 19,500 or so. Bank Nifty also saw what is a doji candlestick pattern, as I explained. Bank Nifty could see some pullback consolidation, similar kind of levels. The low yesterday was 45,000. So keep that as, the lower bound as a bit of a trailing reversal stop. Nothing permanent, but it could lead to a breach below it, could lead to a bit of a pullback, a consolidation, sideways price action. On the upside, for the Bank Nifty, the weekly Bollinger Band stands at 46,000. Actually, it's not exactly, it's 46,000 and some change, but 46,000 roughly is the upper level, the upper bound that we could perhaps work with. Pace of gains, I think this we saw day before yesterday and yesterday as well. Pace of gains in both the mid and the small cap side of the market is slowing a little bit. Mid caps actually ended lower. And unlike day before yesterday, where mid caps were soft, but small caps rallied, yesterday small caps also gave up gains, and we ended absolutely flat there as well. So again, this is a space which has seen gains coming through very, very thick and fast. The GIFT Nifty on your screen indicating a flattish kind of start, 1450 odd points higher. Yesterday also, by the way, the GIFT Nifty was not indicating a big gap up, but we got a big gap up, which got promptly sold into, and we made that day's low early on by about 10 a.m. or so. So watch the price action. I would say maybe time for some consolidation, time to catch our collective breaths in the face of this very, very steep rally. Rima.
Hi, and watch for the mid-cap action, right?